The lithium market continues to attract attention. We've just had one of the leading investment banks release a refreshed price forecast for the lithium sector, and it's attracted a lot of eyes on it. They've upgraded their lithium price outlook, they've given a forecast out over this next decade. Of course, this is going to give us an insight into the supply and demand dynamic. At the moment, there's a lot of contention about when the supply side response will be sufficient enough to see these prices reach a new equilibrium. So today, we're going to discuss Macquarie's recently upgraded lithium price outlook. We'll talk about what it means over the next few years and also the potential implications as well for many of the leading lithium stocks. If you saw this price forecast, drop in a comment, let us know what you've made of it all so far, and let's get into it. So before discussing the Macquarie price upgrade itself and unpacking all of the numbers, it makes sense for us to think about where do we currently sit? A few different price reference points that we can use as a bit of a proxy for where things are sitting. We know that Pilbara Minerals have pioneered their BMX Battery Materials Exchange auction platform. This allows them to sell the remaining spot that they have into the spot market. Of course, we know that predominantly the majority of lithium sales are done through contract mechanisms, but this gives us an up-to-the-date forecast about where lithium prices sit. Pilbara just recently sold their most recent BMX auction, equates to a price of over $7,000 per dry metric ton of SC6, which is phenomenal. But it's also worth noting as well, of course, battery chemicals going downstream, lithium carbonate and lithium hydroxide. We know the LCE price has continued moving higher and higher, reaching $60,000, $70,000 US a ton. So that's where we're sitting at the moment for both spod as well as the chemicals. In terms of the market assumptions, this came out of the Macquarie research paper that was out over the past few days. So they've upgraded their lithium prices as demand pushes spot prices higher. There's two different dynamics here that they've highlighted. Firstly, on the LCE price, on the lithium carbonate prices, they've seen that domestic Chinese prices continue to trade at material premiums to different regional lithium carbonate prices. They've upgraded now their medium-term carbonate and hydroxide price outlooks, and they expect the prices to stay higher for longer. They've also lifted their regional lithium price forecast to match the pricing strength in China. So at the moment, they believe that they're stating that there's a disparity between the premium achieved on Chinese lithium carbonate prices versus other regions, but they believe that that price differential between these prices will close in calendar year 2024. And then on the spodumene price forecast for their short and medium term, they've both been upgraded. This is reflecting the persisting market deficit despite the accelerating supply response. So they're saying, yes, we're seeing a supply response coming online. We know there's near-term producers coming online over the next few months. Argosy Minerals, Core Lithium, just a couple of those names there. However, the supply response is still insufficient at the moment to meet the growing and insatiable demand that we're currently seeing. We know the electric vehicle revolution is here, it's here now. We just saw the Inflation Reduction Act going through, obviously for approvals now. That's going to help to catalyze EV adoption in the US too. So with all of that playing out, they've lifted their peak price assumption to US $5,000 a tonne, and that's realised on a quarterly average, and they've upgraded their annual prices for calendar year 23, and then respectively 24, 25 and 26. And so to have a look at how these numbers really look in practice, these are the lithium prices from the Macquarie paper there. As you can see here in the change area at the bottom, so the top level there is for carbonate, then in the middle you get your hydroxides, and then at the bottom you get your spodumene. You can see the change across the bottom line there. There is some significant upgrades. When you're going out to 2024, 25, 26, you're seeing 60, 70, 80% upgrades in terms of their forecasts from the old to the new. And you've got to bear in mind that Macquarie have been previously bullish on the lithium and the electric vehicle transition as well. So this is just speaking to the insatiable demand we're seeing and the inability that no matter how fast supply comes online, there is demand ready to soak up that supply. So we're seeing here, carbonate initially was anticipated to peak in calendar year 2022, but that's now been pushed out to 2023 with still strong demand, 24 to exceed 2022. And we're seeing similar types of patterns there in terms of the hydroxide and then the spod as well. So we're seeing spodumene peaks in calendar year 2023, $4,500 US a tonne. Carbonate peaking at over $55,000 per tonne now. And you can see there, obviously, as they've mentioned, they believe the disparity between Asia and the other regions are to close for carbonate moving into the next few years from that. And so just thinking about the market makeup, before unpacking some of the things to consider from the paper there, if you haven't yet, make sure you subscribe, turn your bell notifications on. We do plenty of videos unpacking everything on the markets, the macroeconomic sphere, plenty in the EV battery material space, including the lithium sector. So make sure you've subscribed there. But thinking about some of these things, Of course, battery chemistries are important. We're seeing here in terms of the penetrations for NCM 811 and LFP there, they've forecasted both of these to increase market share. NCM, obviously the nickel and cobalt focus chemistries there to 18% market share in the first half calendar year 2022. LFP, obviously excluding the nickel and cobalt there, as we know, there's been a focus transitioning away from some sectors of the market. LFP battery taking more market share in the mid-range EV market. They're anticipating that will grow to nearly a third of the market share in first half calendar year 2022. It's also worth noting, it's quite fascinating to see in terms of the surplus and deficit dynamic there. Of course, 2019, 2020, strong surplus, obviously as demand's picked up rapidly. We've started to see the deficit and an expanding deficit. They've got the deficit to peak in 2024, though we still won't get back into surplus out into the rest of this decade, according to this Macquarie forecast. It's fascinating because when we think about some of the numbers previously, they saw the peak of the pricing into 24, 25. But of course, as we continue to see a deficit that looks like it'll be fairly significant moving forward, we'll be looking to see where that price equilibrium sits and just exactly where the dust does settle on it all. As we know, Macquarie was the bank that famously tipped that potentially we may see a perpetual deficit into the lithium sector. Obviously, we saw their forecast in terms of the numbers. Who knows exactly where it's going to land? Of course, it's always contentious to discuss exactly how the EV battery material supply chain is going to look. The demand side is very, very strong. The supply side is trying to catch up, but of course, it takes time to bring these projects online. They're specialty projects, especially when you're going all the way downstream in the supply chain. I'd love to know your thoughts. Drop in a comment below. What we can see here is the EV revolution is here and it's here to stay. And it's going to be fascinating to see which companies and which sectors are able to ride the waves. A big thank you for joining us. For now, stay well and happy investing.